Social media is flooded with trading strategies promising overnight riches. But can they truly deliver? Let's test out these 3 viral strategies on social media to see if they are genuine game changers or just hype. In our last trading strategy reality check, we dissected some popular strategies and your feedback was overwhelming. So, by popular demand, we decided to do part 2 of the trading strategy reality check. In this sequel, I will dive deeper into popular strategies that made waves this year. We'll analyze their mechanics and test them in real market conditions and evaluate their effectiveness for traders at all levels. Understanding the psychology behind these strategies might be crucial. If you are ready, give us a like just so you won't be disappointed. First up, a price action video from TikTok user Real Umar Ashraf. This video debunks the effectiveness of trend lagging indicators such as the RSI to simplify trading. It promises quick results with minimal effort by using price action and volume. But is it that simple? And does simplicity guarantee success? Let's break it down and test its validity.
RSI is a lagging indicator, which most indicators are. Not every single indicator, but majority of indicators are lagging, meaning that price has to formulate first and then the indicator follows. So that makes it a lagging indicator. So no matter what happens in the market, the indicator or majority of the indicators will always be behind. And the 2 things that will be ahead is price action and essentially volume of the transactions that is happening in the marketplace. So if you have indicators, you have a ton of nonsense on your chart, take it off and simplify your trading. And like I said, focus heavily on price action and volume.
It's time to test out Real Umar Ashraf's recommendation on real market data. Join me as we test it out. So as you can see, we are trading on the Europe Composite Index, which currently has 93% profitability. So, well, since the duration, I think we would have to open some rapid fire deals based on the 30-second duration. At this point, based on the current trend in the market, that is, as you can see, price is currently falling. So let's try to find a very good time that is a good entry point. So at this point, once at this level, that is once we hit 7,702 or 3, I'll continue the trend up. If price falls below that is 7,701, then I would continue the trend down. So at this point, all what we need is to find a very good time, which I feel is right about now. So let's see. It's quite fascinating that is trading without indicators, but in this case, I think you just have to look at the trend where price is moving and then you continue with the trend. In one. Okay, so in this case, applying the martingale strategy, that is, we'll go ×2 of the initial trade amount, and then we try once again. That is to look for a good entry point. Let's continue. Once we hit 7,102, we'll continue up. Move anything below that, that is, we'll continue with a trend down. It's about time to continue up. Let's see what the market would offer us. Okay, so at this point, price has retraced, so more likely to continue up once again, $200. If price continues to go up, then I would continue up once again. So this is a key level. I think could continue up here once again just to increase our profitability. So we made profit here. Let's continue up. How many seconds more? 4. Nice. Nice, closed in profit. Let's try once again. So we have one more for $400. We have 30 seconds remaining. This is a real moment of truth. 3, 2, 1. And boom. So there we have it. I think this really works. So guys, as you can see, the recommendation from Real Umar Ashraf actually works. So it's not about having a lot of indicators on the chart because it gets confusing. At this point, I think it's very clear. You can see where price is heading and then you just continue with the trend. Nice. Next up, we have another popular scalping strategy. This strategy also relies on price action, patterns, and some historical market data to evaluate an asset's performance. It looks quite easy and effective, especially if you enjoy a laid-back trading approach. Let's check it out.
What we're looking for to define the first part of this scalp is for a stock to make an up move, that A leg should be at least 5 consecutive green 1-minute bars. The second part of this trade is the B leg of this trade. And this B leg is really just a retracement. Now we're looking for the B move to be very, very consistent. So we identified it with at least 3 red bars. But what we're really paying attention to is, are the top of those bars creating a clean trend line? You know, if the buying is kind of there, it's going to support it. So the price action will look very clean on the down move. We're buying the trend line break with a stop below the lows of the trend line break. Really, the stop's kind of below the turn. So we're using the candles as our guide, but we're buying that and we're looking for that buy program to kick on and continue and drive us higher significantly.
I think I love this strategy because it's very good for scalping. You can easily determine, when the trend, that is before you get in, you'd have to define the trend and identify where price is going to break out in order to set your appropriate stop loss. And especially if you are trading on Forex, you can take some partial profit, that is by scalping off some few pips. I think we can definitely put this to the test in our next video. So I think it's time to move on to the next one. The next one I'm sure will blow your mind because it has some kind of humor in it, but you would also, understand, especially if you are trading every time. Next up, we examine and humorously doubt my friend's strategy. This strategy is quite funny because it reminds me of, one of my friend's strategy. But then, while this strategy presents lightheartedly, it kind of raises some serious questions about the importance of a well-defined trading strategy and the psychological pitfalls of following unverified methods. Let's check it out. So you have the setup, your support and resistance level, your trend lines, your zones, also a projected uptrend. Let's see. I think this happens every now and then. So this means even the best trading plan, can't get you the kind of expectations that you want. I guess this video goes on to prove that it's always planned to verify, your trade. Once you wish to make an entry, it's kind of ideal to verify it from multiple time frames. Use some couple of indicators, maybe 1 or 2, to verify whether if it's a good time to buy or to sell, or whether if it's time to just abstain from, from opening any position. But I really like this. I think quite humorous. My key takeaway from these 3 videos is to always verify before you trust. We made a video to help you think like a professional trader. Check out the top 5 technical analysis indicator and another dedicated video about the EMA trading strategy guide. You can check out the link in the description to these videos. So, which of these trading strategies are you planning to try? The first, the second, or the third? Share your experiences in the comments below and don't forget to hit the like and subscribe button.